What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I'm going to reveal to you some of my best high yield dividend stocks. Their revenue has done well. I'll go over the revenue trends. I'm going to show you their dividend growth, and they have been generating me excellent passive income. So if you're new to my YouTube channel, I reveal to you, usually at the end of the month or the start of a brand new month, my passive income that I've earned. These are some of my best high yield dividend stocks that have gave me a nice distribution of passive income. Long term wise, I'm going to explain to you what I'm going to do with these dividend stocks with my M1 Finance dividend portfolio. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out these high yield dividend stocks right now. The first one I'm going to go over is a business development company, Capital Southwest Corporation, sitting at $23.77. Has a dividend yield of 12.83%, a PE ratio of 10.40, average volume 432.26K, market cap 1.02 billion US dollars, year range is 1634 to 2617, day range is 2352 to 2401, previous close is 2357. So with high yield dividend stocks, you have to be aware of the risk because they're high yield. And again, business development companies, 90% of what they make go back to investors. So that is a big risk. If the economy takes a hit, they may take a hit a little bit, but the passive income that they've been generating because their revenue has done well has paid dividends for me. So I'm going to jump to their revenue trends. So what increased my confidence in buying this high yield dividend stock is the revenue trends. So annually in millions US dollars, 2016, $9.16, 2017, 23.47, 2018, 35.12, 2019, 51.88, 2020, 62.03, 2021, 68.06, 2022, 82, and then 2023, 119. Huge increase in revenue. Now let's check out their dividend history. I'm going to start in 2018. This is a quarterly dividend business development company. It was 46 cents, 2019 48 cents, 2019 49 cents to 50 cents, and then in 2019 it hit 40 cents, and then 2020 51 cents. Little stagnant, you can blame the pandemic. Then in 2021 it hit 52 cents, 53 cents, 54 cents. And you got a little special dividend of 97 cents at the end of 2021. And then in 2022, you get 48 cents to 63 cents. And then in 2022, 50 cents to 57 cents to 58 cents. And then you get 59 cents in 2023, 62 cents to 63 cents. And then at the start of 2024, you're getting 63 cents. So, of course, you're going to see a high payout ratio with a business development company. Remember, 90% of what they make go back to investors. Number of dividend increases in the last 5 years is 14. Dividend growth in 5 years is 9%, which is nice. If you bought one share, you made 128 with a 9.67% dividend yield. So that is very attractive for me, and that's why I bought them. So let's jump to the next dividend stock. The next one I want to go over is Saratoga Investment Corporation, sitting at $23.67, a dividend yield of 12.34%. A PE ratio of 12.22, average volume 127.67K, market cap 323.18 million US dollars, year range is 2263 to 2887, day range is 2361 to 2379, previous close is 2361. So it's not too bad against the S&P 500, but let's jump to the revenue trends and dividend history. And again, I'm going to reiterate this. If a business development company is not making money and the trends are not good, I'm not going to buy them. I just don't feel confident in them. So, annually in millions US dollars, 2015, 27.37, 2016, 30.05, 2017, 33.15, 2018, 38.61, 2019, 47.70, you can almost say 47.71 if you round it, 2020, 58.44, you can almost say 58.45, 2021, 57.65, 2022, 70.74, 2023, 99. So that is a huge increase in revenue. Now let's check out the dividend history. So I'm going to start in 2017 with them. So right there was 45 cents to 46 to 47, 2017 48 to 49, 2018 50 cents to 51 cents to 52 cents, 2019 53 cents to 54 cents to 55 cents, 2019 56 cents. Then, here's a little bit of the pandemic. 2020 it dropped from 56 cents to 40 cents, but then it jumped to 41 cents in 2020. 2021 it jumped to 42 cents to 43 cents to 44 cents, and then all of a sudden it's at 52 cents, 53 cents, and then in 2023 68 cents quarterly distribution to 69 cents, and now at the start of 2024 it is at 73 cents. So their payout ratio, according to Zacks, is 68%. Number of dividend increases in the last 5 years is 16. Dividend growth in 5 years is 6.78%. You can kind of blame the dividend growth percentage in 5 years based on the pandemic. The high yield dividend stock, 12.20%. And if you bought one share, it's 288. So I've been continually buying them. I really like what they're doing and the revenue trend, so I'm going to continue to buy them. I want to get to 400 shares of them. This next dividend stock, I'm already at 400 shares, which is Arbor Realty Trust sitting at 1301. They've had a lot of negative energy, but they just pretty much shut up the critics. 1301. At one point, they were beating the S&P 500 in the past 5 years. Right here, which is very impressive for a mortgage-backed real estate investment trust. Average volume 6.34 million, market cap 2.45 billion US dollars. Year range is 1010 to 1774. Day range 1267 to 1316. Previous close 1284. So there's been a lot of negative energy, but the positive energy is their revenue, and they're backing their mouth up. So let's jump to the revenue trends and dividend history. So here's their revenue annually in millions US dollars. 2016 213, 2017 346, 2018 44, 2019 535, 2020 603, 2021 779, 2022 1176, then in 2023 1624. So that's a huge increase in revenue. So again, I really like these guys. I'm actually at 400 plus shares in them, and I'm going to show you their dividend history. So I'm going to start in 2019. Quarterly distribution, 28 cents, 29 cents, 30 cents. Then in 2020, 31 cents, 32 cents, 33 cents. Then in 34 cents, 35 cents, 36 cents. I have to actually slow down a little bit because I'm trying to make sure I'm accurate. Then in 2022, 37 cents, 38 cents, 39 cents to 40 cents. Then in 2023, 40 cents, 42 cents to 43 cents. So again, with REITs, you're going to see a high payout ratio, 13.40%. If you bought one share, you made 172. The 10.57% dividend growth. Number of dividend increases in the last 5 years is 16. That's quite impressive. Let's jump to another dividend stock. About another one, FSKKR Capital Corp, sitting at 2023, a dividend yield of 12.65%, a PE ratio of 8.41, average volume 1.43 million. The market cap is 5.67 billion US dollars. Year range is 1707 to 2099. Day range 2012 to 2035. Previous close is 2016. So that is quite impressive. Let's jump to the revenue trends and dividend history. So let's look at this. Annually in millions US dollars, 2017 419, 2018 394. That's a drop a little bit. That's a little bit of a red flag. 2019 779, 2020 pandemic, 639. 2021 1081, and then 2022 1635. So it has increased in revenue. Again, there's always a risk with high yield dividend stocks. I mean, I'm going to explain to you what I plan on doing with my high yield dividend stocks, like for part 2 of this video. But let me show you the dividend history. So here's the dividend history starting in 2019. It was very stagnant at 19 cents. 2020 was 15 cents. There's a drop. I mean, you're going to see, and you can blame the pandemic. Then in 2020, it was 60 cents, stagnant. 2021, 60 cents to 65 cents. And then in 2022, 62 cents, 63 cents, 68 cents, 67, 68, and then 70. And then you have this little special dividend of 5 cents, and then 70, and then 5 cents, and then 70, and then 5 cents. So they are doing that. Their dividend growth isn't the most electrifying or powerful compared to like Arbor Realty Trust. So it says negative 3.54%. You're like, yeah, the pandemic. Their payout ratio is 81%. Number of dividend increases in the last 5 years is 8. If you bought one share, you made 256 with a 12.89% dividend yield. I'm going to jump to my final dividend stock. And again, I'm going to explain to you what I plan on doing and my strategy with a lot of these high yield business development companies and mortgage-backed REITs. The final one is Triple Point Venture Growth BDC Corp. They are way down. I've been capitalizing on them. They're sitting at 1102, a dividend yield of 14.52%. They've been down a little bit. And past 5 years, they versus the pandemic, they have been destroyed. And for people like me, I study these high yielders a little bit more. And I say to myself, is it worth it to put some money in? Now, yes, TSLY took a hit. Big deal. That's play money. Zim took a hit. Big deal. That's play money. I still may buy Zim. I like it. It's a weird model they have with their distribution with investors. I mean, to use potentially Zim's passive income to buy dividend growth stocks, that's one strategy I still may have. TSLY, I blame it on Tesla. I wouldn't go all in them, but I mean with NVDY and all that. But again, those I put play money. This is where I'm putting money in because I feel pretty confident. Market cap 397.67 million US dollars. Year range is 913 to 1287. So there's a big dip. Day range 1096 to 1117. Previous close 1101. So let's jump to the revenue trends and dividend history. So somebody like myself seeing this is very attracted to this. So annually in millions US dollars, here's the revenue trends. 2016 43, 2017 51, 2018 64, 2019 73, 2020 91, 2021 87, 2022 119. So that is up, and I'll show you the most recent trends. So just studying the recent trends, the trailing 12 months, it has gone up. Okay? That's the one thing that attracts me to them. And I really like that. And I'll even show you the past 5 years, it's going up. The past 3 years, it's going up. Past 2 years, it's going up. And the past year, the revenue has gone up. So that's one thing that's very attractive. Now I'm going to jump to the dividend history. So they've been a little slow, but they're starting to make some noise. So I took a risk investing in them to see what happens. So look at 2014, 32 cents to 36 cents. Then it looks like they did special dividend 15 cents. In 2015, it was 36 cents. It's been 36 cents until 2023. So it's slowly starting to come back or make some noise. Dividend growth in 5 years is 2.14%. If you bought one share, you made 160 with a 14.53% dividend yield. Number of dividend increases in the last 5 years is 4. So I just want to be very clear with these 5 dividend stocks, and one of them is a REIT, Arbor Realty Trust. The market goes bad, they can go bad. Now, is this the most reliable dividend stock? No. Is it more reliable than TSLY and Zim? Yes. Those are very volatile. I mean, again, Zim could make a comeback. TSLY, they could do a second reverse stock split. So that can be an issue that you have to be aware of. But these have done well for me currently, and I'm going to reveal to you what I'm going to do with their shares. What I can do with them is use their shares, use their passive income to buy my dividend growth stocks like Bank of America, like EPRT Properties, like let's do another one that's a good example in my portfolio, Kroger, okay, Hormel Foods, Invitation Homes. Another one that's pretty good right now, Starbucks. So what I'm going to do, and I'm going to be very honest with you, this is what I plan on doing. I'm going to get to probably 400 shares in a lot of these. Put them in a separate pie. Use their passive income to reinvest and buy in Starbucks and all these really good dividend growth stocks. T. Rowe, Simon Property Group, Prudential, Pepsi, Agree Realty Corporation, American Tower, Coca-Cola. There's going to be an opportunity to do that probably in 2.5 years. All right, first thing I'm going to do is pay off debt. Okay, I'm going to like 10,000 left in student loans. Then I'm going to still dollar cost average, but I'm still going to really pound and may even do lump sum and dollar cost average with my buys and get to 400 shares in these, leave them alone, and really the dividend snowball effect is going to kick in with that. I'm hoping that works in theory, but there's no guarantees. So I just want to go over that. That's kind of my thought process because there are some really good dividend growth stocks I have. And then I can throw them into a separate pie and maybe add some dividend growth stocks, United Health Group, and never touch them in this and never have to put money in this dividend portfolio again and just reinvest and the income by them to invest and buy that. There's some serious potential with that. I still may have to dollar cost average a little bit, but my gosh, to use this passive income to buy some of the best dividend growth stocks out there and the most powerful ones, Visa and all that. That is part of my plan with it, because I have a lot of shares, a lot of stocks. So eventually, this is going to flip. Probably 2.5 years, because I'm really focused on the real estate sector and financial sector. There's going to be a big shift and change, and I will not have to put money into a lot of these dividend stocks because they're going to buy, and then I can do lump sum payments on United Health Group, Costco. There's a big vision that this could work. It is starting to work, and actually the funds, my Yieldmax ETFs, are actually buying dividend growth stocks. So it's starting to already turn a lot faster than I expected. But if I get to 400 shares in a lot of these, now Arbor Realty Trust is on my etrade, that I may get to possibly 1,000 and then start using the income from Arbor to go on here. So that's kind of my strategy right now and how things are looking. But I mean, my gosh, imagine 200, 400, 600, 800,000. I mean, that's money being put in because of these guys, and it's possible. It's possible. It's a strategy, but this is kind of what I plan on doing. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will have a video for you tomorrow. Let me know what you think of these 5 high-yield dividend stocks. Take care and have a good one. And I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use this YouTube channel for any form of financial advice. This is strictly for entertainment purposes only. Investing is a big risk. You have to do your due diligence. There's a risk of losing money. There's a risk of gaining, well, not really risk, but you can gain money, you can lose money. There's a risk in that, so you have to do your due diligence. It is best to seek financial advice from a financial advisor because this channel is entertainment purposes only. If you're looking for financial advice, speak with someone certified or to give financial advice or is a financial advisor. Do not use this YouTube channel for any form of tax purposes because you have to speak with somebody that's a tax advisor for tax purposes. So I hope you enjoyed this video, and if you're new to this YouTube channel, make sure you subscribe, hit the notification bell, and I'm going to be very active on this channel. So I can't wait to celebrate hitting $100,000 this dividend portfolio soon. And I can't wait to reach 20,000 YouTube subscribers with all you. Take care and have a good one.